Welcome back, traders, to this video where we're going to be looking at the importance of actually trading with a sound mind. Now, this is a topic that often gets overlooked when actually trading, when getting into trading and trying to just place a few trades. Whereas mindset is a very crucial part of your trading career and exactly how much benefits you get out of the market in terms of profit, beneficial reward for yourself. But yeah, a trader needs a sound and composed mind to trade currency or any other market, commodity, stocks, whatever it might be. If we are not mentally stable, we won't be able to make a profit. So even if we do make a profit in the short term, if we're not able to sustain or keep that profit on a mental level, for example, not being satisfied with the profit or wanting to be greedy and go for more profit, then obviously that can lead to actually losing the profit or going into loss. So what we need to do is we need to try and find that balance and work out ways in order to improve ourselves so we can actually better understand ourselves, so that we can actually make trading work for us. Now, a large part of trading is about decision making, deciding which entries to enter, whether to get into the market, when to get out of the market, and everything around your risk management. So we need to be emotional. Now, a large part of trading all comes down to decision making, and where we're getting in the market, how we're going to be getting out of the market, the amount of actually risk that we're going to be placing into a trade. There's many different decisions that we need to think about when we're actually trading, and in order to actually better make those decisions, we need to make sure that our emotions don't get in the way and don't interfere with those decisions. Many traders are emotional and most lose, and obviously if you follow what most of the traders are doing out there, then you're going to get the same results because you're using emotions. You're getting fixated on trying to make quick profits, and basically your emotions is controlling the way that you actually trade. So what we need to do is make sure that we're trading with like those traders who are actually making a profit out of the market. So that's not letting the emotions get in the way and actually making logical trading decisions which are going to be beneficial for our accounts. Now, this is something that I personally did struggle with in the early days, and that is doing good market analysis, but you can't make money in the long run by trading due to psychological issues. So you might actually be very good at breaking down the charts, for example, identifying long-term movements, but you go onto a shorter term time frame, and for example you might see a target on the daily or on the 4 hour, but then you're looking for entries on the hourly, half an hour for example, and you're just not quite finding that right risk to reward, or the stop loss just keeps on getting hit, but it eventually does go to your target. So what we need to do is we need to make sure that we are tweaking our plan and trading style along the way, but making sure that we aren't letting the short-term issues, for example your stop loss being hit multiple times over and over, affecting the way that you're actually seeing the market on a long-term basis. That should still shine through what you were looking at on the higher time frames. Whether you're even trading on the 1 minute and 5 minute, always be looking at the hourly, the 4 hour, just try and get a visual overall direction of where the trending markets are actually occurring, and then try and base your opinions around that. And then obviously going down to the shorter term time frames, perhaps use a wider stop loss in certain situations, or look to actually get in the market after you've seen more evidence to actually get into the market, or more confluences in order to meet the requirements for you to actually pull that trigger on that trade. Now, you'll never find that perfect trade. A lot of traders come into the market and they want that quick profit. They want one for sure trade that they're going to make money on, one trade that they're going to be able to pull the trigger on, make a load of money, and then start trading properly. Obviously that never really happens truly, but we want to try and find the best decisions on a trade by trade basis. A person with a fresh mind can make better decisions, and we all know that when we come back the next day or the next week and we look at the charts and we can see what's actually happened from our prior judgment, we can actually make fresh decisions and actually better decisions, which can actually help, you know, our long-term sort of strategy and performance. So we do want to make sure that we are taking those breaks to better help our mindset. So trading psychology reflects traders' thinking and behavior patterns. Now, this is obviously true because the way that we actually trade, our performance can hinder our mindset and our actual our psychology as a trader. Simply put, it's about the balance of fear and greed that governs each trader's behavior and investment. So we need to make sure we're controlling this idea of fear and greed. The moment that we actually get scared, let's say a trade goes into loss, we actually start moving the stop loss. You know, obviously we want to make sure that we are always planning our trades ahead, so that there are no room for these judgments when you're actually in a trading position, because obviously moving your stop loss to increase further loss is obviously not a good idea, and it can it obviously will lead to worse performance. And then on the other hand, greed, you know, when are we actually going to be taking that profit? Let's say we're doing a 1-to-3 risk to reward ratio. We're risking, let's say, £100 to make £300. If the trade goes into, let's say, £200 profit, and you can see that, for example, there's some heavy news coming up, you know, you need to ask yourself, would you enter that same trade given that the scenario in that position at that moment with that level of risk? You know, that £200 profit plus your initial risk on the trade just to make that extra £100. Obviously we don't want to be closing out all trades when they're in profit, but these are things to think about when you're actually in the position and you've got certain things happening like news, strong fundamentals coming out, and then we can actually look to, you know, bank those profits when we make them as well. So yeah, basically we need to understand ourselves when it comes to fear and greed and try and control those in the best way possible, and we do that by planning our trades ahead. Traders can actually fail if they are not mentally satisfied with their earnings. Now, we have mentioned this before, obviously if a profit, let's say, you know, a trader makes decent amount of pips, a very good move, let's say they've banked a decent movement on their chart, they've found the entry, they've plotted the entry, execute the trade, let's say it's hit their take profit, but they're not satisfied with the profit amount in terms of money. This can lead to them actually putting pressure on their trading accounts and their next couple of trades, for example, rather than aiming for the skill in the long term. Now, obviously, this can be devastating in some cases. It's happened to us all. Obviously, we make a bit of profit, we feel unstoppable, we feel overconfident. Then we try and increase the lot sizes, increase the pressure, try and look to make even more money. So what we need to do is try and, once we've actually made a win and booked that win, we actually close the charts. We document it, we can make screenshots, we can write about it, but then also step away and give yourself time just to you know, splurge elsewhere, not in the forex market, because it's quite easy to just give them the profit straight back. So we need to make sure that we're doing other things in our lives to actually, you know, make sure that we're coming back with a fresh mindset, like we said, and coming back clean without that need to just try and increase the amount of profit or get that profit back if you have actually made a loss. So whether you win or loss from the profit from the market, whether it's your day trading or swing trading, it's a good idea to take those routine breaks and then aim for that skill in the long term and to trade in volume. A sound mind for trading is quite relevant. You should not underestimate the benefits of your mind and being in the right mindset when you're actually trading. There's many ways that we can do this. Obviously, like we said, take the breaks, come back quite clean and fresh. At least you feel fresh and not, you know, too angry or overexcited when you're looking at the charts, and especially when you've got MetaTrader open and you can see those buy and sell buttons rather than just clicking them out of pure hope. We need to make sure that we're using our strategy and making sure that we are using our best judgment we possibly can for our trades. So obviously understand how, what you want first of all out of the market, understand the amount of time that you're putting into the market, and make rational plans, decisions of exactly what you want out of the market. And overall, it comes down to how much you look after yourself and your own mindset. We all know that coming back fresh, coming back with a clean mindset without that, positive or negative emotion is going to lead to, better decisions. If you play some relaxing music, you're well nourished, you're well rested, then you are going to be making better decisions when it comes to your trading on the charts and in MetaTrader. And when it comes to making better decisions, it becomes to making better profits, better actual amount of money that you're extracting out of the market on a long-term basis. So it is all about increasing your expected value out of the market. So that's all for now. Stay tuned for more videos to come, and trade safe.